Hey, Steve Saretsky here. As always, Canadian real estate market update, the particular focus on Vancouver. If you get sort of value or entertainment out of these videos, all I ask you to hit thumbs up and subscribe. Questions, comments, put those below. I want to apologize first and foremost. I'm in the process of redoing my entire office. So I understand that the audio setup on this one might not be the best. But bear with me. I hope the new office will be set up by next week. We invested in a whole bunch of new audio and visual equipment, so we should be rocking and rolling here moving forward. So let's get through this video, but a couple quick housekeeping tips. Check out Addy Investments. I'm a huge proponent of these guys. They are trying to fill up their last bit of their Calgary commercial office investment. I'm personally invested in that one, so go and check that out. But speaking of Addy Investments, I also had a good conversation this past week with Jeff Booth. Jeff is on the advisory board at Addy, and for those of you who don't know or didn't see it, I did an interview with Jeff on YouTube a couple months ago. We're at 50,000 some odd views now, but Jeff wrote the book called Price of Tomorrow, which is essentially discusses basically the manipulation of our currency through monetary policy and the effects that technology will have on this moving forward. Jeff is actually also part of that whole thesis is that he's a huge proponent, a huge Bitcoin bull, which kind of helps me frame this week's video up because, my personal view on Bitcoin, for example, was, back in 2017 in that tulip sort of mania, the Bitcoin crypto blow off. I never participated in that. I never really understood that well. I thought it was kind of a scam. I thought it was, this stupid idea. I was a little bit naive to it, to be honest. And it wasn't until sort of 2018, after it crashed, I started doing some more research. And in 2019, I started building a position in Bitcoin where, I probably averaged in at about $9,000. Obviously today we're at 40,000 and climbing. But the reason why I say that is not to brag or anything. The reason I say that is because the whole purpose of this channel, what I'm trying to get home in this video this week, is the idea that what I've come to learn and appreciate by studying a lot of these investors, and by no means am I some sort of investment guru, but I'm certainly trying to learn and better myself. And what I've come to learn and appreciate is that the best in the business, the best guys, the best in the investment space, is that they turn out to be agnostic. They don't really care or have an opinion or a view on asset classes. They're willing to change and shift based on how the facts change, what happens to certain asset classes. And so the biggest thing that I see in the comments on YouTube here or on Twitter and some of the feedback I get is these people that they hate, for example, they hate Canadian real estate. They hate Vancouver real estate. It's overpriced, it's a bubble, and they've been saying it for 5 or 6 years, and someday, somehow, some way, this thing is gonna blow. And despite when the data significantly says otherwise, they'll pick some sort of cherry point marker because that's what fits their worldview. That is, their confirmation bias. And again, when the data starts to come out, so then this has been my biggest thing, right? So obviously I was bearish, and we did these videos, these Q&As back in March and April and May, and I said, hey, listen, you need to be very cautious here. CMHC's forecast is probably fairly legitimate. I tend to agree with it. And then the data started to change, and then the facts started to change with what central banks were doing, QE, et cetera, et cetera. So what I want to say is you have to focus on being agnostic and changing with the data. So again, because I get these people on here again that say, well, you don't buy Canadian real estate, it's the most overvalued asset. And fair enough, by a lot of metrics, it is overvalued. Prices are extremely stretched. Now Bitcoin's a tulip mania. You shouldn't invest in that. It's going to go to zero. And then they say, well, okay, well, stocks are so expensive. Can you believe that they're up? Hitting new record highs in the recession, so don't buy stocks. But they're not offering any sort of investment advice. They're not offering any sort of investment value. What are you buying? What are you sitting in then? So you're just sitting in a fiat currency, or and then obviously you get the other side where it's you literally just buy gold bars, stuff them under your pillow, and when the power goes out, you'll be good. And so again, I feel like that also doesn't really provide any value either, because the truth is, for the most part, things are going to improve and things are going to get better, and there's always light at the end of the tunnel. We might not like a lot of these policy measures, I might not agree with them, but for the most part, things will and are getting better. And so that's kind of what I wanted to focus on this week. I mean, I'm looking at, obviously we can talk about the Canadian real estate data as we always do, but I also want to focus on the bigger picture. And what I'm getting at here is, again, basically, don't, just because I'm the reason why I'm not promoting the market, but the reason why I'm bullish is because the data is so clear. The data is just like it's just like punching you in the face of like, so let's just look at the recent December statistics here. Basically, this is early reporting across a lot of the major metros in Canada. This is December sales growth on a year-over-year basis across our large metro cities. I mean, we're basically hitting new record highs in all these areas. I mean, even Calgary, that has been this beaten up market over the years, 40% sales growth year over year. I mean, the data is just staring you in the face, and everyone's like, well, it's gonna crash. It's like, guys, we've been through 8 months here. There is zero probability that rates are going to be hiked in the next 12 months. There is zero likelihood that fiscal stimulus pulls back. Just because you like it or want it to pull back because that's the right thing that you feel they should be doing, doesn't mean that it's going to happen. And so that's the point. What I'm saying is you're having this strength in the middle of a recession / pandemic, and the stimulus that's basically artificially supporting these markets. Again, the stimulus measures, the fiscal and monetary measures, the stimulus that is currently underway is artificial. That's what it is. It's conjured up out of thin air. It's artificial stimulus. But it's not going away, and so it's going to continue to support the markets. That's not to say that you can't have pullbacks, you'll never have a correction, that things aren't overvalued. That's not to say that. The point is that you can't just sit there idle in fiat currency while they explicitly devalue the worth of that currency. Your money supply is up in Canada is up 15%. So they've added 15% more current fiat currency into the system in just 1 year. They're telling you that they're going to continue to do quantitative easing until the recovery is well underway. Well, when's the recovery? When is the recovery? Last we checked is, we just got another tidbit here in December, is that Canada just shed jobs. So that the recovery now that was underway is obviously rolling over. And we said this was going to happen. Go back to my videos 6-7 months ago. I said that you're going to have a double dip recession when we shut down the economy in Q4 again. I said it would happen. But that doesn't necessarily mean that just because you're starting to lose jobs again, that financial markets aren't going to continue to push higher, because financial markets are not the real economy. They've completely disconnected. And again, I don't think that, I'm not happy about that reality. I think for society, that's an unfortunate situation. I think that you're going to create, again, I've talked about this massive wealth gap that continues to grow. But that's what it is. And so as long as the fiscal monetary stimulus, the artificial stimulus is there, we'll continue to probably see new highs in Bitcoin. You'll probably continue to see new highs in the majority of the stock market. You'll probably continue to see new highs across the Canadian housing landscape. And that's unfortunate, but this is more an implicit devaluation of your currency, and you have no option. So again, if you don't like a certain asset class, if you don't like Bitcoin, that's fine, don't buy Bitcoin. But you have to put it into something. You have to, at some point, you got to put your chips on the table and make a play. And so I don't care what that play is. You can go lever long on oil stocks if that's your thing. If they're cheap, go long on those. I have no issues with that. I got some oil stocks, but you got to do something. And the guys that just come on here and they chirp and chime and say everything is a bubble, it's like, dude, like you're not providing any sort of value to anybody. It's really just embarrassing at this point. And again, we can talk about these repercussions. I said there are going to be repercussions. My view on the Canadian housing market has not changed. There are obvious risks. There are obvious risks in the Canadian housing market. There's obvious risks in every asset class today. But the reality is that the probabilities significantly weigh to the upside than they do to the downside in the near-term future, i.e. the next 3 to 6 months. I can't predict what the market's going to be in a year, but what I can tell you is one of the most common threads that I get back, and one of the most common feedback, probably the most common feedback in the Canadian real estate bear case, and I had this bear case too, is, well, when rates rise. Well, when rates rise, it's going to blow up. Well, when rates rise, it's going to drop 30%. Well, when rates rise. I totally agree. But I can guarantee you, maybe I won't guarantee, but I will, with utmost conviction, 99.9% conviction, is that real rates cannot rise. Interest rates cannot rise. You're going to see some movement, like we're seeing in the bond market right now. You're going to see some movement in yields, and yields will start ticking up, and people are going to go, oh my God, look at yields. I told you it's going to go. We're seeing inflation. Yields are going up. Oh my gosh. It does not matter. Yield curve control is inevitable. It's inevitable. They don't have a choice. The system, forget Canadian real estate, forget it. It's just a small thing. The entire global economy, the entire global monetary system is insolvent. It's insolvent. They cannot, there's no portion of society. It doesn't matter if you're in Europe, it doesn't matter if you're in the US, it doesn't matter if you're in Japan, it doesn't matter if you're in Canada. Central banks can't raise interest rates. They're stuck. They painted themselves into the corner. Not my fault. But they did, and they can't raise interest rates. And so what happens is, okay, well, yields are starting to rise. What do you think they're going to do? Let them rise? Okay, let it go, boys. The global debt to GDP is off the charts. The entire system blows up. So yeah, you can do the reset, and everybody lives on the streets in their tinfoil hats, and nobody has a job because rates go from 0 to 10%, and everything blows out. It won't matter. It won't matter because no one will have a job, and it won't matter if you went levered long on a Vancouver condo or you levered long in your stock portfolio, because it's all going to blow up. Real rates can't rise. And so what's going to happen is yields are going to start to pick up, and the central banks, which they've already told you they're going to do, but everybody seems to want to fight them and be like this bond vigilante. They've already told you they're going to do yield curve control. They've already told you. Go look at Japan. Okay, the Bank of Japan basically owns the entire JGB bond market. Bonds don't trade anymore. It's not a free market. Bank of Japan owns the bond market, okay? And Canada, currently, Bank of Canada owns 35%. So we're 35% on our way to nationalizing the bond market, okay? That asset class is gone. It was a great trade. It was an awesome trade for 30 years. Anyone that bought bonds perpetually rode them down to zero. And that was a great return. But that asset class is gone. It's nationalized. Okay? So what's going to happen is yields are going to start to pick up. The central bank will come out and say, the 10-year won't be allowed to rise more than, X percentage. As soon as it gets to, 0.8%, we'll aggressively buy whatever it takes. And eventually, again, they'll probably own the entire market, and they just stroke a check, and it's your own currency. Your central banks don't go insolvent. They're already insolvent. They just print money and figure it out. So that's the whole point. The whole point is stop thinking and worrying about this game. Again, eventually at some point, we're going to have to figure out how this all works. And when the bond market completely gets nationalized, and there's going to be some things to figure out. We don't know those answers. But what I can tell you is if you naively believe that they're just going to let yields run, then there's no point in having this dialogue. There's no point in sitting here and discussing it in a video. There's no point in me debating with you in the comments. So that's my message for this week is, again, follow the price of money. Jeff Booth wrote a great book on it. We're going to have him on again. Follow what the central banks are doing. Understand it. And go look what's happening in Japan. Again, they're well ahead of us. Look at Europe. You're telling me Italy and Greece can afford yields to rise? Like, okay, sure. That's my message for this week. Maybe a little bit different, but again, I think like as we move forward in these videos, the goal and the objective really is to bring on more guests, provide more value, particularly as it pertains to Canadians. And I think there's more to it than just real estate. I'm trying to get people to understand the bigger picture. Don't just focus on what you should do with your condo investment. You should focus on understanding financial markets, how they work, how your currency is being manipulated. Okay, so you got, look at this headline for this week. You got Joe Biden now, Presidente Joe, multi-trillions of dollars in stimulus coming. That's the big headline. It's like, they're telling you what they're doing. So the Fed's gonna keep printing money, keep rates at zero, massive QE, kill the dollar. Biden comes in, let's just throw trillions and trillions and trillions and trillions of dollars at it, and like, what are you gonna do? Again, you're just gonna sit there in your fiat currency because everything's a bubble, everything's expensive. But think about it in currency terms, you have no other option. You're paid in fiat currency, you gotta do something with the fiat currency. Hope that video helped. Hit thumbs up, subscribe. See you next week.